Hi. Let's learn about the American Opportunity Tax Credit, AOTC. The American Opportunity Tax Credit is a tax credit for qualified education expenses associated with the first 4 years of a student's post-secondary education. The maximum annual credit is $2,500 per eligible student. The student, someone claiming the student as a dependent, or a spouse making post-secondary education payments can claim the AOTC on their tax return. With the AOTC, a household with a qualifying student can receive a maximum $2,500 tax credit per year for the first 4 years of higher education. Parents claiming a dependent child who is a full-time student from 19 to 24 years old can claim an additional $500 child tax credit. The AOTC helps with educational costs such as tuition and other expenses related to a student's coursework. Eligible students can claim 100% of the first $2,000 spent on school expenses and 25% of the next $2,000. This comes out to a maximum credit of $2,500, 100% times $2,000 plus 25% times $2,000. Tax credits can be refundable, non-refundable, or partially refundable. Up to $1,000, 40%, of the AOTC is refundable, making it a partially refundable tax credit. So, if the credit brings your tax liability to $0, you can receive 40% of your eligible credit, up to $1,000, as a refund. To claim the AOTC on your tax return, you must meet all 3 of these requirements. Additionally, you must receive Internal Revenue Service Form 1098-T from an eligible school to claim the credit. A student is eligible for the AOTC only if they meet certain requirements. Specifically, the student must, qualified education expenses include tuition and some related costs required to attend an eligible educational institution. An eligible educational institution is any accredited public, nonprofit, or private college, university, vocational school, or other post-secondary educational institution. Related expenses include, you can pay for qualified education expenses with student loans. However, you can't claim the credit if you paid for expenses with scholarships, grants, employer-provided assistance, or funds from a 529 savings plan. Qualified education expenses include tuition and some related costs required to attend an eligible educational institution. An eligible educational institution is any accredited public, nonprofit, or private college, university, vocational school, or other post-secondary educational institution. Related expenses include, you can pay for qualified education expenses with student loans. However, you can't claim the credit if you paid for expenses with scholarships, grants, employer-provided assistance, or funds from a 529 savings plan. Those who wish to claim the full credit must have modified adjusted gross income of $80,000 or less, $160,000 if married filing jointly. The credit begins to phase out above these limits and disappears entirely if your MAGI is above $90,000, $180,000 for married filing jointly. Here are 4 key takeaways. 1. The AOTC helps offset the costs of post-secondary education for students or their parents, if the student is a dependent. 2. The AOTC allows an annual $2,500 tax credit for qualified tuition expenses, school fees, and course materials. 3. Room and board, medical costs, transportation, and insurance do not qualify, nor do qualified expenses paid for with 529 plan funds. 4. To claim the credit, your modified adjusted gross income, MAGI, has to be $80,000 or less, no more than $160,000 if married filing jointly. Hope this would help. Thanks for watching.